Guys, welcome to another lesson where we will be looking at what daily and weekly liquidity are. Okay, we will look at the benefits of daily and weekly liquidity, why you should know how to identify them and how you should trade them. Okay, these are very important concepts, so we will look at how we can spot them and how we can trade them. So sit tight, okay, and then we will dive into this particular lesson step by step, because it is important for you to understand this particular lesson very well. All right, before I go deeper into the lesson, if this is your first time watching our lesson, it means you've missed the previous lesson. I'll leave a link to the playlist of the entire training session from lesson 1 till now in the description of this video. Do well to watch each and every lesson. Also, don't forget to subscribe to the channel, turn on the bell notification icon so that anytime we release a new lesson, you will be notified that Accurate Tips has released a new lesson. Okay, also share this video with your friends. Okay, let them also grab the knowledge and the concept of trading so that they can also be liberated from every unemployment situation going on in the various countries around the world. All right, with that said, let's come back to the business of the day. Okay, so now to do this, that is to locate daily and weekly liquidities. Okay, we need to identify the daily time frame structure or the weekly time frame structure. So whatsoever I'm explaining for the daily is the same thing that we are going to be applying on the weekly, so it's not any different. So whatsoever I'm teaching you, so I don't want to make the whole thing complex. So whatsoever I'm mentioning on the daily candlesticks, just transfer the same thing to the weekly candlesticks. So all you need to do is to switch your time frame to weekly time frame. Okay, so I'll be using the daily time frame to do the explanation, but you can use your weekly time frame to do the same thing that I'm using the daily time frame to do. It's the same for all of them. Okay, so the daily time frame gives us the daily movements, but the weekly time frame gives us the weekly movement. So it's like using the previous week to determine how markets will behave for this current week, okay, or using the previous day to determine how market will behave for this current day using its liquidity, that is its previous day high or previous day low, or using its previous week high or previous week low. So these are things you need to understand. You need to get the concept behind to be able to trade properly in the market. Okay, now when I say daily time frame structure, please understand me. I don't mean structural mapping where we have been including inducement to confirm highs and low. No, here we are looking at the whole thing. Okay, we are looking at the whole thing. Our whole focus is on the candlestick structure. Remember, when we're doing market structure, I taught you two types of structure: the candlestick structure and then the overall market structure, where we use inducement, okay, to confirm our pullbacks. All right, so we use candlestick structure to identify our candlestick pullbacks, and then you use that to confirm the highs and our overall pullbacks. That is not what we are looking at this time. We are looking at the daily and weekly candle liquidity using the candlestick structure only. Okay, so now let's look at the illustration that I have over here. Okay, so let's use this illustration to explain one or two things before we go and look at the live chart. All right, guys, so now when you look at this illustration here, you can see that we are in what? we are in a bullish trend. Okay, we are in what? A bullish trend. Bullish trend. We are in a bullish trend. Okay, so this shows that we are not, we are moving upwards. Bullish means we are going up. For those of you who have not watched from beginning, okay, the introduction part of the course, when we say we are bullish, it means we are out, we are moving up. So during the candlestick structure, I thought that the individual movement like this, for example, we have green, okay, it means we are extremely bullish. But then overall movement here is bullish because we are going down. All right. All the abbreviations I've used here, I have labeled them what they mean over here. Okay, so if you see me put LP somewhere, it means low probability setup. If you see me put HP somewhere, it means high probability setup, but we will come there. So let's say we are in a bullish, okay, trend. So let's look at a bullish trend example. Okay, so if, let's say for instance, market breaks the high over here, okay, in a bullish trend, okay, of the previous day. So this is the previous days of candlestick. Okay, either by just sweeping that high, like for instance here, this candle just swept the high of this one, or by candle body closing. In the case of this one, the body of the candle have closed above the high of the previous day's candle. It doesn't matter whether the body has closed above it or it's just a liquidity or sweep. All that you need to do is, once the high of the previous day's candle was broken, you go to the lower time frame. Okay, since we are dealing with the daily and the weekly time frame, your minimum lowest time frame you go is the 15 minutes. Okay, so for daily I would advise you use 15 minutes, and for the weekly I would advise you use H1 or 15 minutes. Okay, now I'll explain certain things later on using the 15 minutes or the H1 to get your setup confirmation to make entries. Okay, I will explain few things when we get to the live chat on that aspect. Okay, now so once we get to the lower time frame, all that we are going to be doing is to look out for an entry confirmation. Then we take a short-term sell. Listen, we will take out a short-term sell when we get a confirmation. It doesn't mean just because market breaks above you just start selling. No, you have to get a confirmation, okay, to take a sell. Okay, so on the lower time frame, either you look for a flip confirmation or a change of character confirmation on the 15-minute time frame. Then you make your entry. All right, but this sell is going to be a short-term sell. Why? Because we are in a bullish trend. So in a bullish trend, when you are selling, it means you are against the trend at that time. So if you hold for long and the trend happens to change before the time you expected it, okay, it means you are going to be to lose your trade. It means you are going to be to be losing your trade. Okay, so you need to just have a short term let's say a short term sell. Okay, a short term sell. All right, so now let's look at the second scenario. Now I will explain it in terms of bearish trend, but let me finish with the bullish. Okay, because it's just an opposite of whatsoever I'm explaining on the bullish trend. Okay, all right, now if let's say market breaks the low, so for instance now this P candlestick, okay, that I represent here by P. All right, now if you see the R candlestick took the low of this P candlestick, now because we are in a bullish trend, it means that when the low is swept or even candle body closes below it, we look at the lower time frame for a confirmation, an entry confirmation. Okay, an entry confirmation, and when that happens and we are able to get an entry confirmation on the 15 minutes or 30 minutes or 1 hour, then we will what? We will take a buy. But this time, because we are in a bullish trend, okay, we are in a bullish trend here. When we get a confirmation here, we take our buy, we can hold our buy, so it becomes a long term buy because we are in what? We are in trend. But then you can what? Take your first CP at the high of the previous candles whose low was what? Was taken out, okay, whose low was what? Taken out. All right, so that is what you need to understand, okay. So if market breaks previous day's candlestick low in a bullish trend, then you what? You look for a lower time frame entry confirmation, take a long term buy. Please, I hope we are following the concept, okay. Now always look for confirmation on the lower time frame, either a chalk, that is change of character. So those of you who didn't watch the video on change of character, you can go back and watch the video on change of character, or a flip, and we'll be talking about entry models in the next 2 or 3 lectures, okay. So you get to understand what they are. But then if you have not watched the video on the change of character, the full lesson on change of character, do what? Go back and watch that lesson to get yourself updated on that aspect, okay guys, do well to do that. All right, now since you have understood the explanation, okay, before I go on, let me flip this and let's have an explanation on the bearish, in case it is a bearish trend. So let me change this to first, let me save this guy, uptrend, okay, maybe I will need it again. Then let's change to bearish trend. So if we are in the bearish trend, it's a different case altogether, okay. In a bearish trend, so that is a downtrend. Bearish trend means downtrend, okay. All right, so here we are in what? We are in a downtrend. So as I said, everything is opposite of what I explained in the bullish trend. So in a bearish trend, anytime the highs are taken, we look to take what? A long-term sell, okay, a long-term sell. But when the lows are taken, we are looking to take what? A short-term what? Buy, a short-term buy. But as I always say, all this is based on lower time frame confirmation of a chalk or a flip after the break of the low of that weekly candlestick or daily candlestick, the previous day's candlestick or the previous week's candlestick, okay. So it's always good to always mark your daily high and your daily low, and your weekly highs and your weekly lows. So the weekly highs and lows, you mark them at the beginning of the week, and your daily highs and lows, you mark them at the beginning of every day, and then you look at how price will play around it. Now one thing you need to know is that these liquidity levels are also zones. So anytime liquidity is swept or taken out, then when market takes out the nearest pullback, it is now a chalk and not an inducement. I explained this in our previous lesson, so you can get all these explanations from those lesson videos if you watch them. Now one thing I want to talk about here is the HP and the LP, the low probability setups and the high probability setups. What do they mean? Now if we are in a downtrend, okay, which is the bearish trend, and market takes the high of the previous day's candlestick or the high of the previous week's candlestick, then it means that we have a high probability setup. That is the possibility, the probability of market going down, giving us a good trade is high, okay, because we are in a bearish trend, and this is why we are able to hold this particular trade for a very long time. Now, if we take the low of the candlestick in a downtrend, that is a low probability trade, okay, or setup, because we are going counter trend, okay, we are countering the trend, we are taking the trade against the trend at that moment, hence the probability there is what is low. Same applies in the bullish trend, okay, so these are bullish trend. The same thing applies to the bullish trend. When we take the low, then we have a high probability setup. Why? Because that is when market is aligned in what? In a bullish trend, so we are going to take a buy. That is a high probability trade. But when we take the high in a bullish trend, then we have a low probability or setup. All right, so all over here, these are high probability setup, low probability, high probability setup, low probability setup. So this one after that, and here also you can see candle body close. But then once lower time frame give you a confirmation in terms of reversal, you take your trade. Currently you feel we are in a short term downtrend, okay, so you will be looking at a short term maybe buy, okay. But then now that the next day's candle close above this guy, it means you now start looking for a short term sell, okay, once market gives you a confirmation. All right, okay, so now here you'll start looking for a long term buy. We've taken the low, you start looking for a long term buy. We are in bullish trend, okay, and then we're taking the high here, you start looking for a short term sell because this is a low probability setup. Then it continues like that, and here we took out the low again, we begin to look for this is a high probability setup, we begin to look for buy to continue in the buy trend. But this helps us to make proper entries on the lower time frame structural formation, okay. So as I said, this same thing applies on weekly candles and daily candles, and I'm going to show you in the live chart right now. So stay with me and then we will get into that. But before then, if this is your first time you are watching us on Accurate Pips, do well to subscribe to the channel and don't forget to turn on the bell notification icon. The link to all our social media handles and our groups are in the description of each lesson. Do well to contact us and join our WhatsApp page and our Telegram page for each and every update, okay. As I said, we are not doing any signals right now. Everything is about learning. After the lesson, then we can begin to place setups on the page for you guys, and you guys will also be allowed to drop your setups for correction and so on. So guys, let's continue.